Traders, this is John Kennedy, Senior Commodity Market Strategist with RJO Futures in Chicago, to provide a brief rundown of some of the agricultural markets here this morning. The markets overall are lower. Corn trading at $3.63, down a penny. Soybeans are trading at $9.12, down roughly 9 cents. And wheat is trading at $5.13, down 8 cents. Markets are still digesting the negative crop report news from yesterday. It wasn't overtly bearish, but it definitely leaned that way. Once again, it wasn't one of the primary grain reports of the year, but it gave us some insight into both U.S. and world stocks overall. Additionally, today the dollar has rebounded and is stronger, so that's also weighing on agricultural and commodity markets overall. There were some additional gains in those numbers yesterday in the winter wheat production. That is weighing on corn, and soybean markets are under some pressure based upon continued upward revisions in South American production numbers. Over the next 2 weeks or so, the weather is definitely leaning to the negative side, with normal to above normal temperatures through much of the Midwest, with a fairly decent outlook for rain throughout that period. Most of the grains are in the ground, so if we have good weather and good rain, it's going to lead to some good production in those crops overall. And turning to the fundamental side of the market, there's been nothing over the past week or in the future that looks to scare off any of the large fund shorts in the grain markets. Until something comes up, the big boys are going to remain on the short side of this. That said, going back over the past couple of weeks with a bounce in some of the agricultural markets, it's been strictly a rally in an overall bear market. Turning it internationally, Brazil once again raised some of their corn and soybean estimates going forward, and Argentina raised their soybean numbers for their crops for this coming year. Another thing to keep an eye on is that China has begun to release some of their cotton from massive reserves, so that will impact that market. And also keep in mind that they hold significant corn reserves as well, so if they begin to release some of that onto the open market, it'll just be an additional bearish factor to take into consideration. Until the next time, have a great weekend. This is John Kennedy in Chicago. Futures and options on futures may involve substantial risk and may not be suitable for all investors.